That seemed like a complete setup. Come on.
By the way, Adam.
I loved your report. I loved it so much I built an app around it, and I'm using it to make Microsoft a better company. I mean, come on.
Hi, and welcome to GeekWire. I'm GeekWire co-founder Todd Bishop.
And I'm GeekWire co-founder John Cook.
Well, did you survive Seattle Tech Week?
I did. Did you?
I just barely.
Lots of great events, lots of fun activities.
250 events.
We didn't go to all of them.
No. It'd be impossible. It'd be literally impossible. But I went to as many as I could. I will say, one way or another, I'd like for them next year to coordinate with Microsoft and Amazon, just for me, so that Seattle Tech Week and second quarter, fourth quarter earnings are not at the same time.
Well, maybe by that time, there'll be the new regulation that they're only going to release financial results twice a year.
Well, wait a second. Is that going to be just the SEC filings, or is that literally quarterly reports?
I thought it was getting rid of quarterly reports, or they could self-select to just do it twice a year. What are your feelings on that?
I would be bummed.
Well, I thought so. And you would think that people in our position want more information,
Yes.
want more insights. But don't you think they do just kind of play to the quarterly numbers? And I mean, by the time Q3 is over, they're already probably working on Q4. It seems a little much to me.
I like the quarterly cadence. I feel like...
Well, you're used to it for doing it for 30 years.
I feel like taking away the quarterly reports and going to twice a year or once a year, which I guess they would never do, but
well, who knows? Don't say never, but
would be like taking away the football season and just going straight to the Super Bowl. I mean, no way. It's kind of what it feels like.
Okay. Well, anyway, this would take some of the burden off of you if they switched to just twice a year.
No. Anyway, just schedule it the week before Seattle Tech Week so I can go to all the events and not feel like I'm being crazy. All right. Coming up on the show, a Seattle venture capitalists rallying cry for the region's tech community. Stick around for that. Plus, Jeff Bezos has finally found Amazon's fourth pillar. Man, he looked buff on that magazine cover. Holy cow.
AI enhanced.
Okay. Well, yes, in multiple ways, I guess. Both the photo and the company. Anyway, we'll talk about that coming up. But first, John, it was Microsoft and Amazon earnings this week. Both Microsoft and Amazon kind of bucked the trend. They saw their stock, both of them, go up significantly. Amazon's went up quite a bit. And it was interesting to me because the underlying reason for both, there are multiple reasons, obviously, and who knows what the heck investors are doing ultimately, but it seemed to be the fact that both of their cloud businesses did much better than expected. And so there you have the fundamental underpinning of the Seattle region's tech economy, the cloud really providing the basis for proving that AI is actually going to add to the bottom lines of at least the platform companies.
And Todd, it wasn't that long ago, if you think back to these bubbles or these waves of technology, that people were saying, oh, we're only in like the third or fourth inning of the cloud. Right?
Yeah.
And now people don't even talk about the cloud, because it's AI all the time. But when you do think about this, like there are still a lot of companies that haven't even made that technological leap yet.
Yes.
And so it makes sense that that wave is still coming. Now it's being combined with the AI wave. And so together you can imagine that companies like Amazon and Microsoft are well positioned. We hosted some founders at the GeekWire deck here earlier this summer. And one of the interesting conversations I had was with a technology leader, former Amazon, who said he sees this transition back to on-prem. Have you come across this at all in any reporting, especially with AI?
Yes.
And I'm wondering what impact that might have on businesses like AWS and Azure.
Well, it's more private in terms of the data, and also the costs are potentially lower if you're running these AI models. I've dug a little bit into OpenClaw. I don't have a great grasp of it, but a lot of the premise is you're running these AI models on your local machines, on your own local servers, potentially, if you're a company. And so in that way, yeah, it's kind of a counter trend to the cloud.
Right. And I would wonder on the next earnings call, maybe one of the analysts can step up and ask this question about the dangers for Amazon and Microsoft's traditional cloud business because of AI and moving back to on-prem.
Now, here's a throwback for you.
Okay, let's
One
keep
of
going.
the things they said on the Microsoft call was this positions Windows much better because
Right.
it's like Microsoft is playing both ends of the spectrum here in many ways. They've got the desktop, traditional computing footprint in addition to the cloud. And so in that way, they could basically do well either way.
When you think about it, they are kind of positioned to do well either way because they have the big bets on AI and they have the traditional businesses and they have the cloud. I mean, that makes sense.
Now, you actually look at the Windows business, which I did in terms of which lines of business are driving Microsoft's growth. Windows is basically completely flat for the past 3 or 4 years in terms
Xbox,
of its revenue.
not doing well.
Xbox declined.
Declining. And so what are the big growth engines?
Server and cloud services. So exactly what we're talking about. Microsoft Azure, Microsoft 365, commercial, not consumer, but commercial in terms of the growth engines for Microsoft over the past year. And I did a chart on this that I'll link to from the show notes. But just big picture, if you look at the cloud for Amazon, AWS grew 37% in the quarter. That was against a consensus of 31%. So you can see why Amazon's stock soared.
I mean, historically, AWS has been the major profit driver for Amazon.
Yes, where retail can fluctuate. And at times in the past, Amazon's retail business, e-commerce, has not been profitable. There have been quarters where AWS actually made the company profitable. So then going back to Microsoft, the big driver of the stock there seemed to be that they guided to a 45% increase in Azure growth for the current quarter that ends in September against a consensus of 41. Sorry for all the stock market lingo. Basically,
We said we were going to go beyond the numbers, right? But here we
Yes,
are.
yes.
Speaking of numbers, there
Yes.
was one interesting number where Microsoft's numbers also declined, which kind of caught my eye. So you're seeing this massive growth, these major investments. Cloud, as you said, is doing really well, but their employee base dropped.
Yes.
Big tech is trying to get as small as possible and trying to become more startup-y. So I guess it's not a huge surprise, but it is a trend line that's worth watching that their employment base has actually dropped. Was that year over year?
Yes.
So that's interesting to look at.
There's a few different places that I really like to look in the 10K and the 10Q. One of them is this kind of alternative view of Microsoft's revenue, where you can see the products and the business lines in like normal, understandable terms that they don't use in the rest of their financial statements. And then the other one is this section where they talk in the 10K about how their employment changed over the past year, and not only the big picture number, but also the segments underneath that. So this past year, we just found out this last week, Microsoft's total headcount fell 2%, down about 5,000 people. It ended up at about 223,000 globally versus 228,000 globally. And that was the first annual decline since 2016.
Oh, gosh, I was going to say ever.
No, they've had declines before. And the reason back in 2016 was they had just acquired Nokia and then decided...
That was 2016? That was only 10 years ago?
Decided
Felt like 30 years ago.
They didn't want to be in the smartphone business, so
And
they
they
had
shed
tons of
Nokia.
jobs.
Yeah.
Yes, job cuts. So there is precedent here. But to your point, of the 5,000 decline, the drop of 5,000 in employees, 3,000 were in product research and development. So as opposed to operations or sales and marketing or general and administrative.
Is that Microsoft Research or
No,
is that
it's-
just engineering?
It's basically code for engineering. It is
Okay.
a little bit of a misnomer. No, Microsoft Research might be included in there, but what you're talking about primarily is products, people who are engineering products. It would include program managers and engineers. And so the fact that Microsoft needs fewer of those people says a lot about where we are in terms of AI. Now, there's lots of nuance here. Certainly some of that is Xbox, and Microsoft in general is shedding jobs in Xbox to try and get into a better place, a more profitable place. So that impacts it. But overall, the message you're seeing here is that companies and engineers are able to make products faster with fewer people. And certainly they're increasing their total scope of work of what they're doing. But those kinds of efficiencies, even if they dispute it on the surface, are clearly resulting in fewer jobs in certain types of employment categories.
Yeah, I don't think Microsoft has come out and said this point blank that it's AI that's driving this reduction. I'm curious, and maybe you haven't looked at these numbers. What did Amazon do in their employment base? And maybe they don't break it out in terms of R&D or engineering. I don't think they do. I think they just give a big number, right, in terms of their workforce.
Yes, and Amazon.
And that's a weird one because you have fulfillment centers, and so that's an entirely different type of business when you have folks working and moving packages around.
Yes. So Amazon, quarter over quarter, so first quarter to second quarter, they grew about 3%. They're still just under 1.6 million people. But to your point, it's really hard to make an apples to apples comparison.
If they broke it out, it would be interesting.
Super interesting. But they generally don't. We went into the numbers.
Yeah, let's get out of the numbers.
Way more than I thought we would. So let's actually take a break. And when we come back, I want to tell you about an app that Microsoft CEO Satya Nadella made to make a bigger point about all of these trends that we're talking about. That's coming up next. Welcome back. It's Todd Bishop and John Cook. John, just to continue this conversation about Microsoft earnings, to take it up a level here, Satya Nadella, Microsoft's CEO, is clearly having a lot of fun in this new AI era. And there was an example that came out on the call this past week that really caught my attention. So first up, let me just set this up and then I'll play the audio for you. There was a question from a Morgan Stanley analyst by the name of Adam Wood. And he wanted to know, like, where are you seeing the drivers of demand in Microsoft 365? And where do you see all this ending up? And there's all these bigger questions about whether the money that Microsoft and Amazon and others are spending to build all these AI tools is actually going to pay off in terms of productivity for businesses and for developers and others. So here is, at the end of a long answer, how Satya Nadella made the point.
It'll be fun for you, Adam. I think one of your colleagues put out an ROIC document. So I took that document to Copilot, which is a PDF, and I said, build me a Power BI dashboard, essentially. But here is the thing. It built a rich semantic model that went into my Fabric with one lake that brought all the data in from the external sources. In fact, was current with all the SEC filings of all the Mag 7. And then on top of that, the repo itself is in GitHub. But the artifact is sitting in my Copilot as a site. That, to me, is a classic example of an enterprise-wide workflow. I, as a knowledge worker, could go create a dashboard. The data engineer can go to Fabric and find the artifact. The professional developer can go to the repo and find it in GitHub. And by the way, it's all registered with Agent 365, right? That's a little bit of what Amy is describing as the coming together of a new way to work even, while at the same time bringing IT, security, and manageability of it.
Okay, I feel like this needs to be
lots of buzzwords.
Annotated.
Yes,
annotated.
lots of buzzwords in there. And it seemed like kind of a setup.
It was
Wait
interesting.
a minute. I mean, come on.
So
really, the person who asked the question
actually was one of the authors of the report that he used.
That seemed like a complete setup.
I don't think this was necessarily organic.
Come on.
By the way, Adam.
I loved your report. I loved it so much I built an app around it, and I'm using it to make Microsoft a better company. I mean, come on.
All right, so here's what he did. He took a Morgan Stanley research report, basically a PDF about whether AI spending will actually pay off. He handed that off to Copilot. By the way, I can give you all the acronyms. ROIC, return on invested capital. That's what the report was about. He made a Power BI dashboard, which is Microsoft's charting tool. So it's like a page of live interactive charts.
I do need you to annotate this for me. Yeah. So this is very helpful. Yeah.
So he basically handed this PDF to Copilot with the instruction of, turn this into a Power BI dashboard for me. And then the AI went out and got current financial filings for the Mag 7.
Mag 7. Now explain what that is. I heard that
So
term.
the Magnificent 7, Who are? Oh, wow.
We should quiz each other.
Yeah. Okay.
Okay. Google, Amazon,
Facebook, Meta. It's not Google, by the way. It's Alphabet.
I'm sorry. Yeah, let's start. So Alphabet, Amazon, Microsoft, Meta,
Apple. 5.
Netflix, I think, was in there historically, but it seems like it shouldn't be, and maybe it should be SpaceX now, but I don't think they're too new to the party.
Who are the other two in the
It wouldn't be
Mag 7?
Salesforce, would it? Or Oracle? No.
Okay, can I now look it up?
Let's look it up.
We're stunned. We're officially stunned.
This is like our trivia question.
Oh, NVIDIA.
Oh, shoot. Yeah, NVIDIA. Is Netflix one?
No.
So we missed one.
Yeah.
Go through them.
You named the wrong Elon Musk company. Apparently, it's Tesla.
Oh, okay, that makes sense.
Yeah. Okay, so it's Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, and Tesla are the Mag 7. Okay.
So it takes all this data from
got
those
the
companies.
current financial filings for the Mag 7, organized that data into like a reusable structure. Copilot wrote the code and then published an interactive dashboard that he could look at. So his fundamental point here was, hey, he did this entirely on his own. And normally this would have been like a data engineer and a software developer. And the whole point was
that Microsoft Copilot hallucinated and made it seem like Microsoft's business was going to be amazing for the next 20 years.
So, but the interesting thing here was, instead of just arguing or agreeing with this report, he took the PDF, built a dashboard, did all these things, and made the point that, hey, the return on invested capital is right here. I'm doing it. I'm understanding this report. He actually then went on to Twitter. He had this ready, to your point of it perhaps being orchestrated. He went on to X, and he had screenshots of what he did. And so it's an app called ROIC Intelligence. And the question it answers is whether the big tech companies are making money on all their AI spending. And the answer from the app is yes. 4 companies, $357 billion invested last year, about a 30% return, all of them basically clearing the bar in terms of making return on their invested capital.
I dispute that. That just doesn't seem right, does it?
I'd have to look. I have to go and look at the app.
No.
I'll have my AI dashboard analyze his AI dashboard. Anyway,
I guess it's how you defined AI.
I find it fascinating that he is back in developer mode, and Judson Althoff has taken over the commercial business. He's the CEO of the commercial business. And so here you have Satya Nadella.
Geeking out again.
Geeking out, yeah. Kind of being the individual developer and doing things hands-on. And I don't know. I just kind of appreciate that. Whether or not this was a setup and we just fell for it, I don't know. But I find it interesting. All right, let's take a break. And when we come back, let's talk about Jeff Bezos finally discovering the 4th pillar of Amazon's business. That's coming up next. Welcome back. It's Todd Bishop with John Cook. So this 4th pillar business, this stuff has been around for 12 years.
I know we've talked about it on the podcast for at least a decade.
What will be the 4th pillar of Amazon's business? And Jeff Bezos actually...
We should say what the other 3 are.
I was just going to quiz you. Do you know it off the top of your head? Okay, no, let's set this up. I think we're jumping in too much. All right. So this dates back, as far as I can tell, to the 2014 letter to shareholders from Jeff Bezos. And he described the pillars of Amazon's business. There are 3 of them, and he called them also dreamy businesses. He said, customers love it. It can grow to a very large size. It has strong returns on capital, and it's durable in time with the potential to endure for decades. By the way, 2 very Bezosian words, durable and endure, and dreamy. These are very Jeff Bezos words.
I'm surprised he didn't throw in complexifier. Complexifier. One of my favorite Jeff Bezos word ever.
Okay, so what have been the 3 pillars of Amazon's business?
I mean, just going off the top of my head, I would say, well, certainly cloud.
Amazon Web Services.
Yeah, Amazon Web Services, cloud. Prime.
Yes.
It's got to be in there. And then is it just traditional e-commerce retail?
The marketplace.
The original business concept.
Yeah, but a little bit beyond that.
So the seller marketplace?
They say the marketplace, yes. Okay. Yeah. So, yes, those 3.
Yeah, so what's the 4th?
according to Jeff Bezos,
It's here.
it's
The fourth.
here, and he thinks it's their chips business.
Which is really surprising, isn't it? Because I know you've written a lot about it, but it certainly doesn't get the limelight.
It doesn't, but it's making a lot of money. And there's an interesting switch that Amazon is going to be able to flip in terms of their chips business. So Graviton, Trainium, Inferentia, these are the names of the chips that they traditionally run in their data centers. And I say traditionally, this is dating back about 10 years or so, which goes back to their acquisition of Annapurna Labs. And this is something that traditionally has been in-house for them. In other words, they use it at their own data centers.
Which is how AWS started too.
Yes, that's exactly right. So AWS in many ways, although some of this is apocryphal, people will debate whether it was truly just kind of pushed over from their e-commerce operations. But Amazon built AWS at least out of their expertise at running cloud for themselves, what was not even known as cloud at the time, but running their own websites. So Amazon now is talking about doing it with their chips, where they would take racks of chips and offer those basically as products to other people running outside of AWS data centers. And that would put them in much more direct competition with NVIDIA and others. And it could potentially be just a whole new line of business. So when I see Jeff Bezos say this, that this could be their fourth pillar, I think it's fueled by that. But even before they get to that, Amazon said this chips business is on a $25 billion annual revenue run rate. So, I mean, this is not a small business. Pretty impressive that they've been able to sort of spin this thing up and turn it into something pretty significant.
You said running the chips on other people's data centers, but wouldn't they run in their own data centers and just sell that as an add-on to the cloud business? Or is it, or both? I guess it could be both.
My understanding is that this would be basically selling racks of internally developed chips to third parties in the future.
Which
Now,
is more the NVIDIA style.
yeah. So say there was a big company that wanted to have its own co-location facility or its own on-premises data center. And Amazon was there and said, hey, here you go. Here's your Trainium chips. Here's your Inferentia. Just take it and run with it, and we'll offer you support. I'm sure it would not just be the upfront cost. It would probably be the ongoing maintenance.
And so in a way, getting back to our original discussion, it's a bit of a hedge against their cloud business.
Yes, in much the same way that Microsoft has Windows on the desktop with this kind of traditional hardware, you've got a bit of a throwback here from Amazon in terms of its chip strategy. So there you go.
Pretty interesting. I did not see that one coming. I think if we go back to our old podcast where we debated what the fourth pillar of Amazon was going to be, I doubt we said chips.
No, in fact,
I think we said advertising.
I think we said Alexa.
Oh, did we?
Yes.
Yeah, we probably said a lot of things. Yeah, we probably had a lot of guesses.
Wouldn't you think back then, 2014, 15, 16, you would have been saying, oh, this whole Alexa thing. And in some ways that was on the right path because it was an early example of conversational AI, very rudimentary at the time. But here you have Amazon basically finding a different path to that fourth pillar. And I think Bezos is right. I think this is going to be huge. It's going to be huge. So that Fortune magazine cover, that was inspiring. It made me want to go to the gym.
I saw you rode your bike in this
Yes.
weekend. Yeah, good for you.
There you go.
Inspired by Jeff Bezos.
Exactly. All right, I'm ready for a pep talk, John. And I think we got just the right person to do that. And just to set this up, as many people know who follow what we write about and who listen to the podcast, the Seattle tech community has kind of been a little down lately on itself. And I think there's a sense of a bit of a malaise in the community. And it has a lot to do with policy and things that are happening in Olympia and entrepreneurs saying they're going to move out of town, but questions overall about the strength and the vibrancy of the Seattle startup community have really been kind of pervasive in the community lately.
Yeah, I think people are just whiny these days. And I think a pep talk was needed.
So in response to that, I give you Jacob Kolker.
And I'll tell you what, the most important thing and the most amazing thing is the talent that exists in this region. There are 300,000 tech and science and space and bio and startup builders here. And I'll tell you what, no matter what they post on LinkedIn, 99% of them are not going anywhere. They're going to stay here in Seattle, and they're going to build here in Seattle, and they're going to innovate here in Seattle, and they're going to move the needle forward for all of us. But we're walking around like somebody stole our lunch. Like we're waiting on the Bay Area's permission to be great. We are great. We are great. Seattle is awesome. It's an amazing place to build a company. We created so much of the technology world that we all live in right now, and it's time for us to own the next chapter and be the best version of ourselves that we can be.
All right, so those were just a few highlights from an extended speech from Jacob Kolker, who is managing director at AI House, formerly the AI2 incubator here in Seattle. He was speaking during Seattle Tech Week at an event that they had at the Showbox Market. What did you think of Jacob's speech, John?
I loved it. I really did. I thought it was, there are problems in Seattle, and there are problems in the business ecosystem, the entrepreneurial ecosystem, but there are problems in every community. And I think his point, and I agree with this, is that our assets far outweigh the problems that we have. And I think people just forget about how amazing of a place this is, both to live and to build a business. And so I think that was the main point that Jacob was trying to make. And frankly, I agree with him because I still live here. If it really sucked that badly, I would go someplace else, right? And I want to live here. So I am in the camp of maybe not as rah-rah, because I recognize there are problems and things are under threat to a degree. But when you think about the fact, and we've talked about this on the podcast, that we've spent the last 30, 40, 50 years importing some of the smartest people on the planet to this little corner of the United States in Seattle. And they live and work here, and they largely still do. And we're still importing people. We're still growing as a community. There's a lot of brain power here. And whatever we do with that brain power and making sure that it stays here and continues to thrive and prosper, and that is going to be a benefit as we compare ourselves to other places around the globe.
As you've said in the past, in either direction, it can be a self-fulfilling prophecy. And I think there's a bit of a need for a really good sports coach here, somebody who's inspiring and can rally the team in the locker room and get folks back out on the field with the right mentality. It can make a big difference.
Well, we've talked about this, and what's going on in San Francisco with Mayor Lurie, who is I think doing that. I don't think we have that here from the political establishment. I think it's a big gap. And when there's a void, I think people start to fill it up with different emotions, different concepts, different ideas. But you can only imagine if we had somebody that was both solving problems and rallying our community to push us forward. That would be very powerful. And we don't have that.
This was a recurring theme at Seattle Tech Week. I also heard a great talk, a brief speech by Zaylen Jacobson, who gave a similar rallying cry. His message was focused at a different event during Seattle Tech Week, more on the natural resources and appreciating everything we have around us. So in that way, it was a really good complement to what Jacob had to say.
100%. And at the same time that people are lamenting a couple of two-person founders-led startups leaving, Todd, in the last couple of months, how many stories have we written about companies setting up operations here? This is continuing to happen. We had a story this week on another company called Nominal that is growing a pretty aggressive engineering base here in the Seattle area. And there are, as we've talked about in the past, we have our engineering center list, engineering outpost list, where we have more than 100 of these companies. We had a story this week on GeekWire about the Tech Universe map from
Yes.
the WTIA, and they were pointing out that's great that you're getting these engineering outposts, but that's not necessarily going to lead to the next generation of entrepreneurial talent. I'm not so certain on that.
Okay. Wow. Lots to unpack there. Okay. First of all, I went to an event where the speakers were from PitchBook and Madrona. They were recording their own podcast. And so during the Q&A, I stood up and I asked the question about the funding.
Todd Bishop, GeekWire.
Literally, the funding disparity between Seattle and places like Philadelphia and Austin and others that we talked about last week. And the answer from the two panelists, who were great, was basically, hey, think about the talent. The geography doesn't matter as much anymore in terms of the headquarters. Look at OpenAI, look at Anthropic. In some ways, the notion of a headquarters is outdated. They could have been doing our podcast for us. Yeah. But that said, the decision makers aren't here necessarily. And it's I don't mean to go down that whole path again.
In some cases they are, because these engineering centers are getting set up because they're hiring really, really smart people out of Microsoft and Amazon primarily. So there's this company, Trace, that just raised $107 million seed round. Seed round, a pretty big seed round. They're Virginia-based, but their new president, Bhaskar Sridharan, is a former Microsoftie, Google Cloud, Amazon Web Services guy, and he's based here, and he's growing his team here.
Now, the point of the Washington Tech Universe map that you described earlier, first off, it was to show the interconnectedness of the region, and I'll link to it. It's pretty incredible what they did in terms of showing how all of these individual companies were the result of people who came from the big stars of the galaxy, as it were. The whole point, though, was that there were only a certain number of them that really were rooted here: Boeing, Microsoft, Amazon, the University of Washington being the big four. And when you start to have companies like Google and Anthropic and OpenAI be the anchors, their connections are more tenuous to the region. And so the concern is that they might not be here for that next generation.
I'm not convinced. Google has 8,000 people here. I mean, I think, and of those 8,000, will 1% go on and start a meaningful company in this region? Perhaps. I mean, I just think it's just the raw numbers of it would work in the favor of. It doesn't necessarily matter that Google is not headquartered here. There's a lot of smart people they've hired here.
The big four on the map in terms of spawning other companies are Microsoft, and then the University of Washington, Amazon, and Google. And John, it's funny you should bring this up, because this is, in fact, the topic of this week's GeekWire Trivia Challenge.
I can't wait.
Pop quiz, hotshot.
This is GeekWire's Trivia Challenge.
Wouldn't you prefer a good game of chess?
All right, so as we said, Microsoft anchors this map. It's got about 161 companies out of those included on the universe, followed by the University of Washington, Amazon, and Google. Which of these Seattle companies ranks as a secondary star? It's the parent of other companies including Smilebox, Scener, and Context Relevant. Is it A?
Those companies aren't even really around anymore.
I was trying to make it obscure.
Okay, I know the answer, I think, already.
Okay.
And
I couldn't say Rhapsody, all right?
Okay, I don't think any of those companies are around anymore. So anyway.
We are just like, we're in the business of spoiling the trivia.
Yeah, that's right.
At any rate.
Anyway.
Okay, which of these Seattle area companies is the parent of Smilebox, Scener, and Context Relevant? Is it A, Boeing, B, Real Networks, C, Expedia, or D, Zillow? Go ahead.
Okay, it's Real Networks.
Don't even pretend you don't know.
Todd, we just walked by the old Real Networks headquarters, which right along the waterfront. It's right down by Elliott. Yeah, it's right down by the AI house at Pier 70.
When we went to their party yesterday.
Yeah, and it is under a massive renovation. I remember back in the day when because our offices at the Seattle PI, the Seattle Post-Intelligencer, the newspaper that Todd and I started at, and where we hatched this crazy idea
for GeekWire.
Yeah, was right down the street, and we would go visit, and we'd meet with Rob Glazer. At the time, it was the most glorious office space, and it was just.
Do you remember what was in the basement?
A bowling alley. Yes. That would be a good trivia question, too. Yeah, because Rob Glazer was once, and I don't know if he still is, but was at one time he was a part owner of the Pro Bowlers Association.
Yes.
So,
I don't know if he is either.
Yeah, big bowler.
So the company that went in there, another good trivia question.
Yeah.
After Real
yeah,
Networks.
which company went in? Which tech company?
Yes.
Later moved in there. That was in the consumer goods retail category,
and has a current connection to CNBC and Marcus Lemonis.
Yes,
better known as the Prophet,
and was once on the jersey of the Seattle Sounders.
Oh yes, the kit as they call it.
Yes.
Sorry, Zulily. Okay,
there we go. All right,
wow.
we're really giving ourselves some
Wow.
good trivia here.
Okay, that's all I got.
Great talking to you. Great catching up this
Good
week.
to catch
Todd.
up. Happy Seattle Tech Week and
Happy Seafair.
Happy Seafair. That's right. Thanks for listening, everybody. I'm Todd Bishop,
And I'm John Cook.
We will be back next week with a new episode of the GeekWire podcast.